I didn't unmute myself. Hey guys, how is everyone? Hey, hey Diana, nice to see you tune in. Nice and early over here. Right. Cool. Right. So give me a second while I let the rest of everyone else stream in. Vincent, nice to see you too. Nice to see you tune in. Right. Desiree. Oh, it's still full from lunch. Yeah. Nice to see you guys. I see you're tuning in to listen to the earnings report. Right. Alan, nice to see you. Diana, nice to see you tune in. Yeah, the baby's getting pretty big, right? I just noticed my webcam is a little bit off a bit. Yeah. Um, yeah, the baby's getting slightly bigger, right? 3.5 months now, right? 3.5 months. So um, the nice thing is that he's sleeping longer at night. So usually used to sleep 2 to 3 hours. Right now, is sleeping the full anywhere from 6 to 8 hours, right? So a lot easier for us, can get a full night's sleep. um, right, yeah, that's the most precious time. Hey, Kanemba, nice to see you tune in. Yamilu, nice to see you tune in too. All right, yeah, it's a good day to you guys, right? Pedro, Kelvin, all right, good stuff, man. I'm just curious, how do you guys know about this webinar? Do you get an email from IC Markets about the webinar? Hey, Robin, thanks for tuning in, right? Oh, you guys got an email, yeah? Okay, good stuff. Every week now. All right, yeah. It seems like they're email plus checking the site. All right. Okay, good that they sent out the email. Okay. Today's webinar, right? Today's webinar is gonna focus on the earnings report, right? Yeah, we know that every quarter, right? Every quarter, many companies, right? Many companies release this earnings report, right? And apparently, there's a pretty interesting way to trade them, right? WMTS report today, and yeah, so the good thing, is that IC Markets offers a lot of shares that you can trade, right? Not all of them, but especially the large cap stocks, right? You should be able to find them on IC Markets. I'll be showing you in a second how you can find that. Okay, but there is a particular kind of trading strategy where using earnings reports, using the more something like surprise index, right, to more or less gauge whether you can there's a potential trade to take, whether a breakout is going to be successful or it's actually you could be looking for a reversal to trade. So that the nice thing about the stock market is that yes, the stock market does have a couple more what's the word for it, data that you don't get with forex, right? One of it is volume, right? But of course, stuff like earnings per share, financial reports, income statements, right? You don't get an income. You can't really get an income statement on a particular currency. You can see how the country is doing, but it's nothing as specific as like for the stock market, where you can actually look at the P&L, the P&L of a particular company, right? The revenue, the earnings per share, right? The income statement, right? There's so many things that you can dive into later, right? And I'll be letting Annabelle, right, take you through that in a bit, right? But first and foremost, I do want to share some interesting insights about this particular webinar, right? It is different. It is different from forex, right? So in FX, you won't find such things called the earnings report. I'll be showing you a couple of places where you can find some of these. You can get the latest earning reports of not only today, but those that happen those that happened historically, right? I'll be showing you that in a minute. If you have some good websites that you guys currently look at, right, do share them with me. Do share them in the chat, right, so that I can take a look at them too, right? And of course, I can share it with the rest of everyone else on where you get most of your stock market news, right? Clinton, nice to see you tune in. Oh, Finviz is one of them. Yeah, Diana, we'll take a look at it together in a bit. All right. Benzinga too. All right. Well, it looks like you're pretty into the stock market, eh? But anyway, before we begin, first and foremost, I want to let you guys know that yes, there's a disclaimer, right? Everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade. Okay. few places I want to point you guys to. All right, first and foremost, icmarkets.com. So some of you guys are wondering, like, what shares do IC Markets have? Right. The interesting thing is that, yeah, IC Markets doesn't only have FX, but they also have shares. And to find the kind of shares that they have, you want to go to trading, right? You want to go to stocks, right? In stocks over here, you scroll down a little bit further. Yeah, you can see all the list of this. ASX is the Australian Stock Index Exchange, right? You got a New York Stock Exchange over here, and got a Nasdaq, right? And this, well, I mean, between these two, you'll be able to find most of them already, right? You can scroll down here, you can see all the different stocks that there is, right? It's a lot of them that you can trade, and that's the nice thing is that you can trade them on leverage, right? You can trade them on leverage with IC Markets, and if you know how to trade them properly, right, it's a pretty good way where you can diversify your portfolio, where you're not only going to be trading forex, you're not going to be trading gold and oil, but with the daily kind of earnings news reports that are being released, right? Me and later, of course, Annabelle will be showing you how you can apply this, right? At least an idea on how to apply it into your own trading on top of all the different things that you do. All right. So one of the things that I want to ask you guys is that, do any of you all currently keep a close eye on the earnings reports? And when you do, what are some of the things that you kind of look out for? Okay. Let me do let me just see if there's a Hilton. Yeah, you can find Hilton here too. Okay, yeah, you can find a couple of them here. We should be covering in a bit. Okay. All right. So yes, first thing you need to know is that you can trade a whole wide range of stocks when it comes with IC Markets. Okay. I saw a couple of Finvis, right? Is Finvis one of them? I'm just going to take a quick minute to take a look at the Finvis thing here. I don't see the earnings estimate though, right? Yeah. Finvis is one of that. Benzinga is another one, right? Benzingar. Okay, maybe right, Diana, you can share me a little bit more on like which area you currently look at, right? Where we currently look at is actually this site called earnings, yeah, earnings. This part over here, right? So this is a really nice and handy place. It's like earnings calendar, right? Maybe if I search for Finvis earnings calendar, I might be able to find it over here. It could be this one. No, this is the economic calendar. This is the forex one. All right. I'm not sure where is the earning. Is this the earnings calendar? Oh, this is investing.com earnings calendar. Well, still not that great for me. The one that we currently use, I think, is slightly better, right? It's slightly better, right? It's by the Nasdaq one. I'll teach you how to read this in a minute, right? But in a nutshell, what you're looking for is, of course, stuff like it's not over here, right? You're looking at stuff like the EPS, right? What was forecasted, the consensus EPS, number of estimates there, and of course the surprise index, right? How much of a surprise was it to everyone, right? In a good way or bad way, right? There usually looks at Morningstar. Let's see, Morningstar earnings calendar. Interesting. There was an earnings announced yesterday. How do I go further back than Monday? This is a terrible earnings calendar. I can't go further back than Monday. How do I go further back than Monday? Okay, right. So yeah, it looks like business finder. All right, I'm just going to find. I'm just sharing with you guys some of the sites that are being shared by everyone else, right? So we can take a look at it together, right? Even this is not bad, right? It has large cap small cap and before. Let me see. Right. The problem here, right, is that with any of this calendar that you're looking at, it does not actually give you enough to trade with based on the strategy that we have. Oh man, look at this, it's unavailable, right? So it looks like the most reliable one that we have now. Like, come on, man, where's the news? Okay, never mind. Right. For now, we can use what we already prepared, which is nasdaq.com. I'm going to send this link to you guys, right? I'm not sure if you guys can see this link, but check this out. Last website I'm going to look at by Alan Rogers is called Simply Wall Street Earnings Calendar. Is this the one? I think it does, Desiree. I'll need to take a look at it in a bit, right? Okay, I'll take it Simply Wall Street later. Okay, yeah, Simply Wall Street in a bit. I do, okay, without digressing too much, yes, let's take a look at this, okay? I think it does, right? I think it does. Give me a second. Yeah, it was covering stuff like Trading View, Hilton. Yeah, it does. Right, for example, right, we'll like something like Hilton, right? This is like on the New York Stock Exchange, but yes, it's also shown on the Nasdaq.com. So yes, even though it's Nasdaq.com, it does cover those other on the other stock exchange, like the New York Stock Exchange. Okay. I'll look at Yahoo Finance in a bit, all right. But for now, yes, we've covered enough of the different things to look at, right? But the earnings calendar, for the sake of today's presentation, right, we'll be using nasdaq.com. Okay, now let me just move on to the PowerPoint here, right? Introducing your host for today, right? For those of you guys who are here for the first time, I'm just really curious, is there anyone who is here for the first time, right? Is that, do I have any first timers over here? Maybe you can send a quick message so I know if anyone's tuning in for the first time, and where I can point you guys to, especially when it comes to some of the more advanced technical analysis approaches that we use, right? Doesn't look like we have any first timers here. Okay, then anyway, I'm still gonna tell you anyway, so you can do it. It doesn't matter. I think it's important that I point you to YouTube IC Markets, because we'll be referring to the trend lines. Hi there, I'm Camlet. Trend lines, support resistance, Fibonacci, a little bit of Fibonacci on top of our way of interpreting I can't pronounce the damn word, interpreting earnings report, right? Okay, but yeah, this is the link that I want to send you guys to, right? Please go watch it through. Desiree, yeah, I know you've watched at least 50 of them, but yeah, if you can and you should, yeah, just rewatch this if needed. All right. Now, for those of you guys who are here for the first time, right, introducing your host for today, my name is Desmond Leong, right? So I run the award-winning research firm Everest Fortune Group and also the Forex Army, right? So I'm finalist for 2019, 2020, and 2021 Best FX and Best Equity Research, right? Work with major financial institutions, telling them where the markets are heading, right? And we have a special partnership with IC Markets where we bring you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. Not the stuff that you find on Baby Pips, not the stuff that you find on Forex Factory, but also the stuff that are a little bit more less conventional, right? It's less conventional, right? And yeah, hopefully you can learn a lot from it. Okay. Your other host for today, right? I'll be introducing her in a bit, right? Her name is Annabelle, right? You might have seen her around in maybe like the VIP room and stuff, right? But yeah, she'll be doing today's webinar on explaining, what is the earnings report, right? Income statement, how do you read it, right? A little bit deeper, a deeper dive into it, but very, very interestingly, later, right, should be showing you how you can apply it to trading, right? It's a particular kind of approach that we have, right? Which I recommend that you test it out. You do a little bit of back testing on it first, right? It's a way of using the amount of surprise, positive or negative surprise of a particular earnings report to decide whether did a breakout successfully happen or did it not successfully happen, right? And if even with the power of like the earnings report on your side, whether in a good or bad way, if you're not able to break beyond a certain level, that's where you can take a reversal trade, right? So a lot of it goes into deciding how great interpreting earnings report by in a very super simple, I wouldn't say oversimplified way, but in an easy to understand way, and using that in our trading. Okay, it's going to be a great thing which you can immediately use and then apply in your trading. Okay, now without further ado, I'm going to pass the time on to Annabelle. I'm going to pass the time on to Annabelle. Just need to prepare the stuff here, right? And yeah, and she will take it away from here. These are the slides over here. Okay.
So only one checkbox.
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 Yes, only one checkbox.
Okay, hi guys.
Okay.
Thank you, Desmond. Okay, hi Diana. Nice to see you guys. So this is my first session with IC Markets. So if you have any questions, feel free to post on the comment box because I have another section that is open. Today I'll be guiding you through the readings on earnings report. It might be a bit dry at the initial part, but please bear with me. Hi Jen, hi Jamilu, hi Ahmad. Like Desmond mentioned, you guys are not new or not first timers to this session, but I am the first time, so be kind. Okay, let's move on. So today's agenda, please ignore the agenda. So it's about reading earnings report. So what are earnings report? I'm sure most of you have read it before. Is where companies post their earnings for the quarter or for the year. How do you interpret it? Using technicals to increase the probabilities, because in trading, not only do you want to use your fundamentals, you want to use your technicals as well. And then lastly, I will show some live charts to identify the trading opportunities. Hi, Simon. Okay, so for earnings report, so some of you might be wondering why people use earning reports, because earning reports is a gauge of a company's performance and financial positions. So being a good investor also means being informed, and by learning to read an earning report, you are taking a solid step towards making better decisions in the stock markets. So what are earning reports? Earning reports typically are announced or published quarterly. It's a financial statement issued by publicly traded companies. So as the name suggests, an earning report details the profit or losses earned by the company in a given quarter, along with data like their sales volume, their revenue, their profit margins, etc. So every quarter, public companies are mandated, or is a compulsory thing for them to file their earnings with the Securities and Exchange Commission, the SEC. And yep, so this is basically a gist of what the earning report consists of. So every earning report provides a summary of the sales, income, and expenses for the last period, meaning to say every March, June, September, December, usually the end of the month. So just now Desmond have shown you guys, where's the NASDAQ? Yeah, this. So usually typically it's within the quarter, and then different companies have different days of filing. So it's not that on the 16th all the companies has to file. It's depending on when the company files it. Okay, so to gain more insight and to add context to the numbers, actually apart from all these reports that are here, like the balance sheet, the income statement, the cash flow statement, companies usually have earning calls. So it's a webcast or conference call led by companies executives. How many of you guys here have actually listened to a webcast of a company? Any one of you there? Okay, I can show you guys what it is. This is quite interesting because usually I don't use earning reports to do my trading, but then this is something that I have learned. Let me show you guys. So for example, Disney earning reports report. Companies usually release their webcasts the same day or the following day. So usually they will have a webcast where the medias, people from maybe big banks like the analysts, they come in, they listen to the webcast. It's a live conference where they can question what the company is doing. Let me show you another example, maybe Warner Brothers. Earnings call. It's called an earnings call. Yes. Yeah. So you can. It's a 2-hour. It's quite a long session, but usually people tune in to understand where the company is going forward. Like they will discuss their financial results, some of their future plans, and big decisions that they're going to make. Oh, Desiree, you actually tune into that. Oh, that's good. These are additional information that is not in the reports. Yeah. Okay, next. Okay, so there are 4 sections to a earning report. So there will be the income statement, the balance sheet, the cash flow statement, and statement of shareholders' equity. So I will break it down for you guys as simply as possible. It might be a bit dry, but please bear with me. So income statement. So what does income statement show? It is a report on how much revenue a company earns over a specific time, usually for a year or like a quarter, depending on which dates they are releasing this. It also shows the costs and expenses associated with the earning. For example, you can see that there's the total net sales, and then you deduct it. How I usually read a income statement is I take the ladder, you take a staircase, it will go downwards and you deduct. So you usually take a look at the total net sales, and then you deduct your expenses, and then you see what's your net income. Okay, so the literal bottom line of the statement usually shows how much the company's net earning or losses is or are. So this typically tells you how much the company earned or lost over a period of time. Income statement also report earnings per share, or what we call EPS. So this is what I will take note. This is very, very important. Earning per share. This is what we usually take note. Yeah. So how we derive at the EPS is by dividing your total net income with your total share. Yeah. So if you divide it now, you will actually get a $8.35. So this calculation tells you how much money shareholders would receive for each share of stock they own if the company distributed off of its net income for that period. But usually companies don't do that because they will usually reinvest in the business. Okay, so some of you might be curious why there is a basic or a diluted EPS. So basic earning per share and diluted EPS are used to measure the profit. Both are used to measure how profitable the company is, but basically the difference is that basic EPS is calculated taking into account the outstanding equity shares of the company, while diluted includes convertible shares such as employee stock options, warrants. Yep, that's the difference. Okay, now we're talking about what is the asset equals liabilities plus shareholders' equities. So what does this show you? The balance sheet. Usually what balance sheet does is they show you typically asset liabilities and shareholders' equities. So what are assets? As you can see here, it includes things that are of value to the company. So it can be sold or used by the company to make products or provide services that can be sold. So include your things like maybe your property, your equipments like your trucks, your equipments, plants and properties, your inventory. It also can include things that are intangible, for example, like your trademark and your patents. So these are things that can't be touched, but they have existence and they have value. Then we come to the liabilities part. These are the amount of money that the company owes to others. So includes things like your obligation, like your borrowed money from the banks, your rental, your money owed to your suppliers, basically anything that you owe, okay, to make it short, okay, your taxes to the government, etc. And then lastly, we have the shareholders' equity. So it's sometimes called the capital or net worth because it's the money that would be left if a company sold all of its assets and paid all of the liabilities. So this leftover money belongs to the shareholders or the owners of the company. Okay. So yeah, I know actually it's very lengthy and very tiring to have to read all this, and most of us would not know what to use, right? How this information might be used for us to trade, but later I'll show you guys. One thing that I take note of is just the earnings per share actually. Okay, but nonetheless, sometimes there might be a black swan event, you know, where the business is doing well, the EPS is high, but then the shares still went below price of what was expected in the market. So I will show you some examples later. So this part, cash flow part, cash flow statements reports company's inflow and outflow of cash. This is important because a company needs to have enough cash on hand to pay expenses and purchase assets. So in case of emergency where company needs funds. So generally cash flow statements are divided into 3 portions. Each part reviews the cash flow from one of, so for example, 3 types, meaning operating activities, investing activities, and financing activities. So these 3 are different things, but they consolidate under cash flow. So the bottom line of the cash flow statement is just to show whether there is a net increase or decrease in cash. This one is the least important actually. And then we have the last part, which is the, just now I've mentioned, the shareholder equity, which is total asset minus total liabilities. So it essentially gives the shareholder, investors, or company's owner a picture of how the business is doing, net of all the assets and liabilities. Yeah. Okay, so I think now I will go to some charts to show you guys how we use this information to trade or to improve our trading. Okay, where's my trading view? Okay. Give me 1 second. Okay. Okay, so we have done a few tests on our page. Sorry, give me 1 second. Never mind. Sorry, 1 sec. Okay. So we have actually used some of the examples to try to chart it the past few days, past few weeks. It actually kind of works. So maybe we can start with the Apple share. Okay, let me show you guys how to apply. I'll just keep it short and sweet. I know it's very long to read the report, so I just cut to the chase and let you guys know what we usually look at if we want to use the earnings report. Technically, you just need to see the earning per share. So for example, this is released just recently on the 28th of July for Apple. Consensus forecast and EPS is at 1.2. So earning per share, let's see, for the July 28. Okay, let's see. July 28. Exactly right here. Where's my line? Okay, exactly right here. So what we can see here, let me just cut it. Okay, so this is what happened on 28th of July once the report is out. Okay, once the report is out, there was a movement, there was a spike up movement, as you can see here. So for earnings report or for the EPS, how we incorporate that into our technical or fundamental readings is that you can't expect or predict what is going to happen when the market opens. So for example, just now when I chop off here, you wouldn't know whether the market is going up or down before the EPS is released. So what we can actually do is when we can act is only after the EPS is released. So once the EPS is released, it might be already too late, right? Because it has already spiked up. But what we can do here is that we know that the EPS is higher than what was forecasted. That is point number one, which is good. Then we incorporate number two, whether there are any technicals with TA we can use in these charts. So right here, for example, if this had already happened, obviously we can't act on it. But what you know is that the EPS is higher and it's positive. So you might be expecting things to go upwards, right? I mean, that's logical. How do I change this? What you can do then is to plot your charts, like how a normal TA would be done. What we can see here is that there is a good level right here, and that, let me draw a trend. And that maybe price has already broken out, or okay, maybe not here. It's not a very good channel. Okay, or that price, okay, for example, you can still do this on top of okay, so price is already here, so it has already spiked up. Yeah, so what you can apply is that knowing that the EPS is higher and that it has, sorry guys, I can't multitask. Okay, so knowing that it's above the Ichimoku and that it has broken out of maybe an important swing low, like right here, right? Because it has cut through, it has already broken the swing low, you would expect price to still go upwards, right? So what you can do is maybe when it pulls back, it might be a good time for you to enter. So what I can do now is, for example, today is, okay, so this is today, right? What I would predict is that prices might test at this level, might still rise and test at this level. So I will wait for a reversal or price to pull back before I set up another entry, right? So this is how we incorporate the reading of the price report or the EPS on TA readings, right? Let me repeat myself. How we usually do is we will wait for the earnings report to come out. Okay, if the reports are better, but we already have missed but we already have missed it, right? So because it was released on the 20. Yep. So for example, we already have missed the spike up. You don't have to worry, because what we can do is that you can still project forward, meaning to say price might still come back to this level to test, because the breakout is very strong and the EPS is very positive. So there are three things that I see here, meaning to say it's on top of my Ichimoku cloud, number one. Number two, it has broken my overlapping resistance. And number three, there is a very strong swing high here, which I would expect price to actually touch somewhere at this region here. Probably maybe here. Right? Okay, I will give you guys couple more examples that we have tried. Okay, this is so this website is very is good because it shows you when the EPS is reported. So for example, if we are looking at tomorrow, these are the companies. For example, NEO is quite big. Can go by market cap. You can see which companies are reporting and publishing their earnings report, EPS, tomorrow. So what I will do is maybe you can take a look at their charts. Okay, maybe let's try. Let's try. Okay, so for example, okay, Cisco. Okay, price is on an upward trend. So for example, if tomorrow's report, for tomorrow's report, if the price earning, etc., is good, consensus forecast is here lah. Okay, compared to last year, it's actually not that great, but I would assume it's already priced in already. So if let's say the price forecasted come out exactly the same, I would expect this to go up, price to go up, but maybe not by much. But if it's below this, then we will expect price to go down. Then from there on, you can see whether there are any TAs that you can bounce off to give you the extra definition on where to put your sell entry, or where to put your buy positions. So for earnings report, you can't predict what is going to happen, or you can't set a trade entry anywhere. You have to wait until the report is out before you can act on it, right? So for example, okay, this. Okay, so this for this example, what we wanted to show you guys is the fact that August 12th. Yeah, August 12th, right? Okay, so you can see that it's actually very bullish right here. There's a very huge jump in a day. So what we can see here is that your forecast 2.65, and then what was reported is also 2.65. So then you must be wondering, how come if my reporting is the same, it will spike up so much? That was what we had discussed about. What we want to tell you guys is that no change is good as well, because all the price, it's all priced in already. So no change is good as well, right? And then plus in addition, we can see that there is a trend here. price is also reacting off this swing high here, right? What I would do then is maybe if price reverse more, you can potentially look for a buy, okay? Because no bad news is also good news, right? Since the report is actually as expected, as forecasted. So you could potentially look for a buy if it pulls back more. And as well as is also above the Ichimoku cloud. So let me paraphrase again. Although my reported forecasted EPS is the same as what was reported, this is also good news because it's not lesser. There's no surprise to the market. Everybody knows that it's all priced in already. So that's why there's a spike. That's number one, good info. Number two, there is a swing high that we are looking at. Number three, there's a green cloud. So the prices are above the Ichimoku. So these three add together gives me more confidence that prices will go up. So if it pulls back more, you can look for a long position. Yeah. Okay, Kelvin. Okay, what is the price per unit when trading and what leverage does one require? Okay, Kelvin, this is based on what risk appetite and what kind of risk management you use. I can't really advise. Yeah, some people may do 50 or 100 times. Some people might do 500 times. It's entirely up to your own risk appetite. So please do your own due diligence before you enter any trades. Okay, the next example. Okay, for this, yeah, we wanted to do Disney because it was very recent and it was an interesting company to look at. Okay, let's look at this. Okay, so for Disney, recently they came up with their price earning as well on the 10th of August. Let's go back to 10th of August. Wait a right. Wait, right here. I'm trying to do the replay. Right here. Okay. Okay. So we have a 15.96% surprise level. Forecasted was 0.94, but reported was 1.09, which is good. Okay, and let us take a look. So if if nobody knows and if the report is not yet out, this is how it will look like before. This is how it looks like before the EPS was released. Yeah, it looks like it was going on a downward trend quite strongly. But once the report came out, let me zoom in a little bit. Okay, once the report came out, there was a spike up. So obviously, if there is a spike up, we can't take any action, right? And then it'll be too expensive to buy here. You'll be very confused because, I mean, the market is still in a red. So what I would do here is, you know that the EPS is good, so meaning good news. Then I will look at the trend. So what happened here is that the price already broke out of the channel here, of the descending channel. That's number one. So like Desmond has mentioned, what we look for in when we use the EPS is we are looking for breakouts. Not so much like a reverse trading anymore. We are looking for breakouts. Okay, so in this chart here, you can see that the price has already broken out of the channel, right? So what we will do is, we have already missed the trade here. What you can do is to wait for price to pull back before you enter a position, to long it, because the next level that it might look to test or to break would be here, right? So then you can pull all your other indicators like maybe your Fibonacci retracement or your expansion, extension, projection. So this is how we actually incorporate all the tools together. So the report will be so earning. So EPS will give you maybe 10%, okay, because it's an indicator that is a lagging indicator. It comes out the next day and I can't predict it. And then your retracement tools, 20%. So all these tools add together, they will give you a better chance of higher probabilities. Maybe your trend lines, 20%, 20%, etc. You know what I mean. So what we are trying to say here is that not one tool works all the time. If not, I won't be sitting here giving you this. I'll be at home. Okay, we'll all be millionaires if one of these tools work 100% of the time. Yeah. So what we are doing here is we try to consolidate as many tools as we can, so we can find a confluence zone to trade. So Edmund is asking, so if we have a good report, we should expect a spike up and vice versa. Okay, so most of the time, a good report obviously would mean a better chance of the prices to spike up. Yes, I agree to that. But sometimes some of the shares might not react this way. That will be 2 out of 10. If you have the time, I would strongly recommend to go on this page. You can try to use what I have taught today in this session. Go to this page here. I will cut and paste here. Okay, you go to this page. Okay, you try to use the historical earning report to test it, to back test it. So this is what I do on my free time. I will use this page to pick some stocks, or you can do, or you can pick maybe some of the stocks that you are looking at already. You go and see the forecast versus the EPS, and then you try to plot it on the graph. Yeah, but most of them that we tested, 8 to 9 of them works. So if it doesn't, it means that there is something wrong with the reports, and then you have to dig in further to understand what's wrong, or maybe there is a change in management, the CEO has stepped down, or there's an addition to the company, maybe there's a new person or a new CEO, things like that. So there might be other fundamental factors as well. Maybe there was a non-farm payroll, or maybe there was a I don't know, there are a lot of other factors, not just only the report itself. Yeah. So but what we want to highlight here in this session is, despite the whole earning reports reading and all that, I can give you a very very detailed session on how to read the cash flow statements, blah blah blah. But if you can't pick up the important point like the EPS, it will be very difficult to read charts. So this is what we are doing. We show you what EPS does and how we can incorporate that. Okay, so we're looking at Hyatt hotels. This will be my final example. Later, maybe if I have the time, I can pull up a random stocks to see whether it spikes up accordingly, right? Okay, here. Is this Hyatt? Okay, let's see. 9th of August. I want to do the replay. 9th of August. Here. Okay, let's say today we wake up, it's the 9th of August, and we do not know what will happen next. What I'll do is maybe I'll come to the charts. I'll roughly have an idea. Okay, it's in a downward trend. It's still in the channel. I can see a channel right here. Maybe. Okay, not that great. Wait, give me a sec. Downward. Oi. Okay, looks like quite a clean. Okay. Quite a nice channel. Okay, so my expectation would be if price, if let's say they reported that the EPS is lower, I would expect it to go down because there are a lot of reasons for me to believe that, given the fact that there is, let me get my brush, there is the 61.8 retracement, and then there is the channel downward, which is a very nice level for me to do a short if I were only using technical. So in the meantime, this is what I will predict because okay, this is what I'll predict if the price, the EPS goes down. I will mortgage my house and short it. Just kidding. Remember this, take note also, this is not an investment advice. I'm just joking. Don't mortgage your house, please. So if the EPS comes out and is good and it breaks this level, then I will take a look at price going upward to maybe this level, right? Simon, all in, please don't do that. I don't want to be responsible. Okay, so let's see. Wow, the forecast negative, EPS is 0.46. Surprise, 4,700. Let's see. Okay. It's not like a. What I want to highlight also is that it doesn't mean that the higher the surprise level, the more the bigger the jump is. Okay. So as you can see here, this is negative forecasted, but your earning per share is positive. No doubt is going upward is positive, but it doesn't mean that it will shoot up. Yeah, this is a daily chart, by the way. So this is quite a good level. So as you can see here, like I've said, like I've mentioned, although we don't know what is happening, what I usually do is I will plot, I'll plot the chart, have a general sense of direction. If it goes down, I will shoot the hell out of this. I will short, I mean. But if it breaks this level, as it does, this is 11, right? Okay, here, I will wait for a pullback. Okay, because it's really quite a big difference. I will actually buy it right here. If there's no pullback and you already missed it, you just have to wait. This is a daily chart, so I'm pretty sure there will be a lot of opportunities right here. So pullback, yeah, I will wait, I'll buy. Okay, you will react off nicely probably to this level here, or even if you want, you can use other indicators like your okay, I think maybe you can try a projection. Let's see. I think it already hit the projection level. Yeah, it already surpassed my projection level 100%. Okay. Yeah, I guess you can only use your FIB. Okay, so it also broken the 78.6 level. It probably will reach the 100% and the swing high. So this is how we use the EPS to incorporate into our readings, right? So I hope this session is useful. I just want to say that although I can have a whole session to teach you how to read a the cash flow, the balance sheet, the whole earnings report, it will be very boring, very dry, and I don't see how it can incorporate into my stock, my TA plus the readings. So I shorten it to focus on what we usually do, which is the earnings per share, and then I incorporate into this session to show you guys how I use the TA plus the EPS to help me. So I will leave you guys with some tips. So tip number one is that you can't predict where the price is going to move before the EPS is up. So what you can do is just have a general sense of where the market is going first, and be patient, because let's say if the price already has spiked up or spiked down, don't fret, because there are always opportunities in the trading market, right? You don't want to buy at the highest level or sell at the lowest, right? Everyone wants to buy low, sell high, correct? And for this session, we are looking for breakouts as well. Earning reports, we are looking for breakouts. But for previous session where we learn all our Fibonacci's, all that, is all reversals. So it's a different way of trading as well. So when you put them two together, there is a higher chance or higher possibility that it will fine tune or better fine tune your entry or sell level, or your take profit and stop loss, right? Okay, thank you guys for tuning in. Thank you, Jamil, Kelvin, Simon, Diana. Okay, I hope you enjoyed the session, and I hope I was clear enough. Moving forward, I might be taking you guys for more sessions. I will try my best to teach all those that I've learned from Desmond, obviously, who is my mentor and my boss. And I hope it'll also be a learning session for myself, because the more I teach and the more we discuss, we can share some information as well. So yes, see you guys next time. Thank you. Mhm. Yeah,